Hey guys, in today's video we're going to talk about greed and fear in the market and how it can destroy your trading performance. Hey guys, Akil here. Welcome back to another video. Thank you as always for taking the time to join me. Big thank you for everyone that decided to donate to Thursday's one-day give event. It was a record-breaking day and I really appreciate the support. I know you guys don't have to do it. It's really hard to donate for things that you don't personally care about, but I'm glad that you felt that, hey, I want to support what this guy stands for, and it was a massive day. We're going to help a lot of people out. In today's video, we're going to talk a little bit about fear and greed, and this is going to be a follow-up on really last week's conversation on trailing stops. And if you guys are new to the channel, I've been doing these weekend videos for way too many years now, in the double digits, but this year I wanted to do something a little bit different and make it more like a documentation. So instead of just giving you a random topic each week, I wanted to build on what we talked about before, so it's kind of like a continuation process. So I do recommend going back to week 1, watching all 7 weeks up to this point. That way you have a good idea of what we've been doing thus far this year. But last week we talked about trailing stops, the pros and the cons, and I used an example of a pound-dollar trade that I was in. This was a home run trade for me, meaning one that I was shooting for larger targets, and unfortunately I was stopped out only to see the market rally up to my projected target level, and it stung a little bit. It hurt. I'd be lying if I said I was happy about it. I am happy that I followed my rules, but it's never fun to see the market do exactly what you predicted and not be a part of it. And that was kind of the good and the bad of should you trail stops or shouldn't you trail stops, right? This week I had another home run trade on the euro yen, and this one had a little bit of a different circumstance. This was also a difficult trade. Now in hindsight it looks like it rallied straight up, but this was a trade that was entered. It went about 70 pips in my favor. I would say about 85–90% to target ones, and then came all the way back down to break even before eventually rallying higher. And when that typically happens, a lot of traders give into fear. They see the market move in their direction. They're up 70 pips. They're counting the money before they actually have it. Remember, profit isn't profit until the trade is closed out. And then they come back around, they see that they are back to break even, and usually that triggers fear within the trader. Oh my gosh, Akil always says good trades don't last, right? Good moves should be direct move, they shouldn't come back, so I should get out of this before I take a loss. And then they end up sabotaging their trade instead of giving it room to breathe, right? This is why it's so important to understand structure and to know the dynamics of price action and be able to look at a price chart and actually tell, hey, am I in danger, or is the market just kind of doing the little dance that it always does? Psychologically, that's going to keep you in a good perspective. And I know in this trade particularly, there is absolutely nothing on the chart that said any sign of this trade is going to go against you, like we did last week with the pound dollar. Now, another hard part of this trade is the fact that this trade rallied about 100 pips past projected targets, right? I was looking for a secondary target up at 129 even, so 128.98, and we went all the way to 130. And this triggers something else in many traders, right? The first one triggered fear, this one triggers greed. And what I see a lot of traders do is, although they made the right call, although they made triple-digit pips on the trade, they're not satisfied because they want every chunk. Yeah, I got off at 129, but there was 100 pips left on the table, and I should have that as well. And what many newer traders or struggling traders do in this instance is they carry that forward to the next trade. So the next trade they get super greedy because of recency bias. The last trade went past their projected targets. So maybe this next trade I'm not going to put targets. I'm going to try and get off all the way at the top. I'm going to try and milk every pip out of the market. And the truth is, that's not our job, right? Our job as traders isn't to call tops and bottoms. It isn't to get every single pip out of every single trade. It's to get what we came for and get out. I always use the bank robbery reference, and I got to put a disclaimer on there. Tier 1 trading does not promote bank robbery or anything like that. You know, people sue and all types of stuff these days. But if you're going to rob a bank and you try to steal every single thing in the bank, you are more likely to get caught and pay the price, right? You're more likely for the risk of robbing a bank to outweigh the reward. The best way to rob a bank, not speaking from personal experiences, is to go in, have a game plan of what you want to get, right? Your game plan is based off the surveillance you do of the bank, just like in the market. Our game plan is based off the surveillance that we do of price action in the chart and our ability to project what we believe is the first sign of danger, I like to call it, the first sign where the market may reverse. And we only want to get that much. We want to get in, we want to get out. And our goal is we want to avoid risk, right? That is again, I feel like I say it every week. Good traders are great risk managers, right? Our ultimate objective in the market shouldn't be to make as many pips as possible. It should be to manage our risk. So anytime we have where we can make money and not lose anything on the back end, that is a win. But you see that greed take advantage of many traders as well, where they overshoot their profit projections, meaning they want to get more than what the market is willing to give them. And then before you know it, the market crashes back down and they end up making less. And that just skews up their whole expectancy and their profit factor and whatnot. So don't get upset. Always go back to the chart, do analysis, see if there was something you could have done better. Maybe there was a hidden level of structure that you didn't see. Maybe there was some pivot point or a Fibonacci confluence, something like that. You always want to do your homework and see how you can better yourself. But tap yourself on the back for a great trade and don't have the expectation of getting everything out of it. Speaking of expectations, just to keep you guys updated, we are about 8 weeks in this year, so 2 months. I am still exceeding my expectations as a trader, right? I ended January, if I remember, 8% in profit, return on investment. I'm at about 13.5 right now, so 13.5%. So it was a little bit less of a month, 5.5% return on investment this month in comparison to the 8 previously. But if you know me and if you've been following the videos, my goal is simple, right? If I can make 3% a month on average, not every single month, but when it's all said and done, I am having a good trading year. So I'm still kind of batting above my batting average. My win percentage is about 76%, or I'm 75%. So I was 76% in January, 72% in February. So I'm kind of going back down to my normal area, which should be anywhere between 55 and 60 if I'm hot. But return on investment is still good. Again, not as good as the month before, but batting higher than my expectations, so I'll take it. So looking forward for the good times to keep rolling. I am taking less trades. A lot of that has to do with, well, we had the week-long event this something's yelling at me. The week-long event this week, which took a week out of my trading. Another part is that I'm not doing the day trading anymore, so that's going to limit the quantity of trades I take. But my goal going into the year was also to become a little bit more efficient with the trades I am taking. So I'm not taking as many trades, but so far, knock on wood, fingers crossed, right? I'm getting better at the trades I'm taking. I'm sticking to my grade A setups, and so far it's paying off pretty nicely. So that's your update, because I know you guys like hearing the performance and whatnot. So let's hop into the charts. Let me show you what's on my radar for this week. Let's start off on the euro dollar. All week we've been waiting for a few things here. We got the head and shoulders pattern that we were looking at, and we might have looked at this in last week's video, but if you remember, we were also looking for a Cypher pattern on the higher time frame, on the daily. And we came ever so close to getting it before the market retraced. Our Cypher was looking like this. We were looking for a decompletion at the 786, and you can see we did not quite get there. However, we do have a Cypher pattern in the opposite direction forming, right? You're going to see it right in here. Probably should have left that fib on, but swing low to swing high. This is going to be our X to A. This is going to be our A to B. This is going to be our B to C. And our CD completion is going to be right down here at our 786. I probably should have used the Cypher drawing tool. If you're on TradingView, don't use the regular pattern tool. It's going to give you the wrong fibs. But I'm off the assumption you guys know how to draw this if you're actually trading it. So look for a potential bullish Cypher here on euro dollar if we can push down to 120.11s. Next is going to be the dollar Canada, the loonie. And this was, if you guys are in the live room, this was the volume play that we looked at right down here, right? We had the loss of momentum pattern. We had the loss of volume. We had the lower range candle with the higher volume spike. And lo and behold, boom, 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 right? So this is the stuff that we've been paying attention to. We talked about doing the eye test, and instead of just back testing these concepts, looking at them in a live market to really test your predictive analysis. This one worked like a charm. Now, while we're on the concept of inside bars, just a quick reminder, if you guys are on the platform, whether you're a trial member or a premium member, I would advise going back to the Wednesday session of the New York Live Room. We had an awesome strategy development session, so awesome that I titled it Awesome Strat Dev Session. But if you go back to, it looks like, what, the 30-minute mark, so probably a little bit after that, let's go to about 35, 40. Yep, you can see our talk about inside bars and talk about inside bars, talk about volume, and that just led us to talk a little bit about strategy development. And the cool thing is this, for you guys that are new, this is a great session. Not necessarily, I don't know if the strategy is going to work. We're just playing around with some stuff, but it's a great example of how to, the process of how to go about developing strategy, how you start off by understanding what you're looking for, and you start adding tools that will help you identify what you're looking for, and then you start adding more tools that complement that. And we talked about adjusting indicators and how I don't believe the default setting of an indicator is great. You have to know what the indicator tells you. You have to adjust it based on what you want it to tell you and based off how you want it to complement price. And I think it's a good opportunity to see that process, and it's cool to see all the minds in the live room come together and think of something great. And this is something that, hey, may end up being worth testing. So make sure you check it out. Again, Wednesday recording of the New York Live Room. It's up. All my recordings are posted. Most of Jason Graystone's are posted. If you're not involving yourself in the live room, honestly, you're missing out. I understand everyone can't make it live, but I would definitely invest some time to watch at least one New York and one London session each week, especially because it's a lot more than just going through the markets and finding trading opportunities. There's some really, really good discussions, kind of like mini Q&As on what you need to do to become a better trader. It's also good to see the differences between how myself and Jason Graystone analyze the market, just in case one is a better fit for you than the other. So check it out. While we're plugging, might as well do this, right? Trial membership, $1, 14 days. Get on the platform, try stuff out, do it. I'll put a link below. Shameless promo over. Now, we've rallied up essentially straight from 124.66s all the way to about 127.48, so almost a 300 pip rally. And we're due for a little bit of a relief. If you go over to your Ninja Trader charts on the hourly, you're going to see an overlapping VS1 level here. But look left, structure leaves clues, right? You can see we're running right into a previous level of structure where we've seen selling pressure in the past. We do have a little bit of an overlapping structure situation happening here, which means you want to be protective of your stops and get them above that level, in my opinion. But I would look for some relief at this area. I would look for some type of retracement, perhaps coming down to maybe a head and shoulders type of deal. So coming down to match the right shoulder, or what we would think is going to be, or match the left shoulder and what we would think is going to be a potential right shoulder. Let's go down to the hourly real quick and see. You can see there's a little bit of structure right here, but certainly keep a counter trend structure-based trade for shorts on your radar for dollar Canada as we open the week. Next is going to be the pound New Zealand. Very similar situation on here on pound New Zealand to dollar Canada. You see price action. Most recent move was a nice one-to-one measure move down here. Beautiful area of accumulation, right? You can see we just consolidate, right? We consolidate here and then boom, we get a markup right back into a previous level of structure. Again, look left, structure leaves clues, right? The market consolidated, dropped off, consolidated, rose up. Perfect example of the stuff we talk about in our training sessions, or say the workshop a few weeks ago with the Wyckoff cycle and accumulation, distribution, markup, markdown, the basic concepts of how the market moves. Good example of that. Those are fancy words. You don't need to know all that stuff. It just means the market goes up, down, and sideways. But the point you need to pay attention to is that we have rallied back up into a previous level of structure. This structure has shown to be important in the past. I would think it's going to be important in the future. And the same thing that we looked at with dollar Canada. Look for a potential right shoulder to be formed. If we're going to get a symmetrical right shoulder, right? We should look for a move back down to this area. If we draw a Fibonacci retracement on, let's see what that gives us from the swing low to the swing high. Look at that, it's gonna give us a 3D2 right in that level. And if we dip down just to a lower time frame, you're actually gonna see a pretty significant level of structure, right? Market takes a little bit of a pause during this rally where we go up, we retrace, and then we continue up. So a nice little level of structure here. And of course, look left, we saw the exact same move on the way down previous. So again, these things aren't coincidental. They're here for a reason. They leave us clues. These are the clues that we need to pay attention to when it comes to either looking at entries, targets, or stops. So market started losing momentum towards the end of the day on Friday, end of the week, which isn't a surprise, but ended with a very, very nice lower low, lower close. Look for shorts down to 191.50s here on pound New Zealand. So next up, we're going to go to the dollar index. And if you're asking yourself, this looks familiar. Yeah, we just looked at it essentially on the euro dollar. The euro basically makes up, what, 60% or something like that of the dollar index. So this chart is essentially the inverse of the euro dollar. But we have a cipher completing or a potential cipher working its way up to completion here on the dollar index, looking at an X to A to B, B to C, and then our CD completion would be right up here at 91.20. And if you're asking yourself, how frequent do these pattern formations occur, or do they even occur on markets and asset classes outside of specific currency pairs? The answer is yes. And how do we know? Well, because we just had another cipher last week here, right? If we take a look at this last move up, this was our X to A, this was our A to B, this was our B to C, and then we had a CD completion right here at our 786. So target 1s and 2s are already hit for that. Potentially getting a back-to-back cipher here on the dollar index. Moving on, we're going to head to the S&P next. Last week, we took a look at the NASDAQ, and we looked for a, I think it was last week. No, it wasn't last week. Sorry, it was a social media post I put out last week, not in last week's video. But we talked a little bit about buying the dip. We had a very interesting, with the bloodbath in the market a week ago, and it offered a lot of good buying opportunities. And if we continue to dip lower, you're going to see the same thing here. However, this one, instead of just buying at the lows, we're going to have a potential advanced pattern formation setting up as well. This one is going to be a bat pattern. So we're looking at this initial leg up, this extension being our first move, our X to A. This would be our A to B coming down to that 50% retracement. Our B to C is that retracement back up at the time of potential extension that never ends up extending. And if we can push down to this 886 level, right, 371.14s, this is going to be a bat pattern completion, of course, coming at a previous level of structure. So an awesome place to look for buying opportunities if we indeed can push down this far. We gotta break past this level first, but if we do, this is going to be an awesome buy. Last but not least, we are going to talk about silver. Silver has been in consolidation, but we are coming to a significant level of structure. You can tell here on the daily by the wicks, right? We see something, or we saw something very similar right here, 1, 2, 3. We're seeing something very similar right here, 1, 2, 3. This comes after the higher high, higher close. Now, we haven't broken out from the bigger range, which would be ideal. It's not ideal that we tested this and held this, but we have been making a series of higher lows, higher lows, higher lows. So a decent, very low risk opportunity. Look for buys here on silver. If we go down to the 4 hours, should make it a little bit clearer. Yep, you can see previous support, bounced off of it, consolidated, 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 found support, major rejection right here. Getting an opportunity right here would be a very low risk buy because, again, we know exactly where our stops are going to be. Stops need to be, right? Let's say we get involved at market, for example. Stops need to be below the lows right here. If price action pushes below those lows, we know we're wrong. Very conservative targets can be at a retest of the highs. Of course, if you're in this for a bigger move, you're looking for a retest of these highs and, of course, a continuation even higher here. So decent opportunity to look to get involved with silver. Even if you got to drop down to a lower time frame and maybe look for like a double bottom of that sort or something of that sort. That's just going to make your risk reward even better. Hope you enjoyed. As always, like, comment, subscribe. I will see you guys next week with another episode of what is this called? It used to be called the Trading Edge. Trading in 2021, week 9 coming soon. See you then.